What's popping, G? So again, we are back. So today we're gonna review the price action for gold because the last week actually provided a lot of sauce. Actually, the price action is very weird compared to the fundamentals. So let's review very quick the fundamentals. Let's not talk about Trump. We know what happened with Trump and what's going on. Every day is something new. Last week was Zelensky, but there will be something new next week, probably with Elon Musk also. So just pay attention to those facts in the mainstream media because we cannot measure really as a economic indicator whenever he talks and what he's gonna say. Like sometimes he can even tweet and markets will react. Like in his first. I forgot the word, but the first time he was president. So the data, the preliminary GDP was very stable because we managed to stay in the, we didn't go in a negative area like with the unemployment claims that were actually the unemployment and the jobs creation were very stable at least in the start of the year. It was growing and the unemployment was decreasing. We saw that in the NFP, in Xauusd. We saw the unemployment we have here the 220, so we know that unemployment was declining. And even though we had the forecast with 2K higher than the previous, like 242K, that's a lot. That's 22K and 20K above the forecast. So this should be very, very, very bad news. The PCA is a very good indicator for the Federal Reserve. They actually like it, so we can consider this again good data. So we assume it's a mixed environment, but after gold pushing so hard and consistently to the upside starting this year and continuing the past year very bullish momentum, we topped to the all-time high at least 3 times. That is this first touch at 29.41 more or less, depending on the broker, and this double top that created the new all-time high that it's around 29.53, depending again on the broker. So for now this looks like a very healthy retracement. We are around we are close to the 50% in this $121 move. The total move for 2025, let me check, it's more or less here. So it's 361 versus $361 trend versus a $121 retracement. So we are near the change of at least the breakout structure. I also marked this in the analysis I'm posting in the blog. So in case you are not subscribed, you can go to the end of the main page and you can add your email. It's nothing spammy or anything. It will just remind you once I post, and the weekly or monthly source I'm currently posting. So this will be also a video post will be video for YouTube and post for the blog, so more people can check the analysis. So here we marked once we lost this level that was acting as support for a long time in the past year, was preventing for price to go for new highs. Then it pushed. We have the push that I always told you, like we need to see big candles leaving the area, because here we can see big candles leaving wicks in this area and going against the price of that area. So this is the 4 hour. These are very big wicks, and then price managed to break with this type of candles. That these are the ones that we want to see. Very strange. This was during London. As you can see, this is the London Open, and these two are in Asia. So then we have the USA session around these 2-3 candles, very low volume. But when market opens again after the rollover, we got this big push to the upside that was quickly sourced out as a manipulation. As you can see, it took liquidity again out of these 2 weeks, create a new one, but the pressure again to the upside was very huge. So pretty much what price is doing here is create an area of manipulation. So you're placing stop loss here, aiming for the bullish momentum. The fundamentals, everything is aligning at this point. We have the Trump news, the Elon Musk drama, everything combining to create a bullish momentum for the gold price. But you are getting stopped out because you are not giving enough time for your position to breathe and to take the momentum with it, because price will be bullish as we can see, but it needs momentum and liquidity. So here the price was taking liquidity from this specific area. That is very important you mark it. It can be a little bit higher or down, but this was very good range for the other move that we had in this week. So we can see we have the two double tops, and as soon as the new high was created and we started getting news in past week, we have these big candles. Also again very uncommon, but we were having big candles in Asia and London sessions. So Asia is pushing very hard the dollar on their favor, and it seems like they're dumping gold. But given that China, for example, and India are countries that like to hold a lot of gold or physical gold, they have huge reserves of gold, it makes sense that they want cheaper prices, and at the same time they want gold to be higher, because for example here they're selling big amounts of gold. They're creating these big candles that it makes sense, because you cannot you expect this candle at 8 it's my 8 a.m. 8 a.m. is more or less either news release, as you can see here we have 7:30 a.m. but sometimes we have 8:30 a.m. news, or is the New York Open, the NYCE Open. So it's natural that liquidity will push the dollar, at least in that specific session. But in Asia it's not common. You want to see JPY or prepare for Euro or GBP, you know. It's not strange, but you don't see all the heat in the Asia session. At least sometimes can happen in London, but it was very heavy pressure. So also don't forget China is a large owner of the debt of USA, so they're mixed in what they want and how they want it, you know, because I always tell you, like, gold, it's naturally going to be always bullish against the dollar, but that doesn't mean that you really want to be buying gold all the time, you know, because it's not a yielding asset. You need to wait for this price to go up. So if you are buying in this area, let's mark this rectangle. Like if you're buying in this area, you're right now in drawdown. Like, I'm not laughing at the position itself. I'm not laughing at the loss or anything. But my point is, you're still waiting for price to get back to your zone. So if you're not averaging to the upside when price is going down, or if you are not doing something else but leaving your position here where you bought the first time, it might take years for price to go back here. It can happen with this last candle that we get enough liquidity to get at least to the beginning of the orange box, but a lot of times in the past when we broke all-time highs, or when we were near the all-time highs, we really dropped. Like, we went south and those prices were not touched again in years. Like, the idea is you don't position yourself in prices that are pushed by macroeconomical, geopolitical, and in this case also money printing. Due to the COVID situation, governments are still trying to fix the deficit they have, because a lot of liquidity entered the market that was not there. That's why we have huge liquidity since COVID compared to past years, and that's something that won't stop. This money is already priced in the economy after at least 4 years that COVID started, and we can consider it's not yet done because the damage is still there. USA is in a heavy position of getting into recession with all the fuckery that the President Trump is doing versus what the Fed is trying to do. So the manufacturing was already at expansion, the services was close to being expansion. Actually, sorry, it's already in expansion, but it was close to being expansion at this year, at the beginning of the year. So this means pretty much that the economy is recovering. The rates cuts were beneficial for the people, for the employment, for the unemployment, because it's important to understand employment and unemployment are not the same indicator. Like, there's two different ways to analyze those. There's also the NFP we're having the next week, and the unemployment rate is something that I want to be comparing to what we are having right now as the current unemployment claim. So if we see this number drop and this stayed flat, this will be very, very, very good for the dollar. The services and the manufacturing sectors right now, we don't care. We have a very good PCA price index, at least with what we are seeing, or for example this number going so abruptly to the upside. Well, it was a very good day for the Fed, I'm not gonna lie. So then we will have Federal Chair Powell speaking on Friday, so we will also be paying attention to the speech. But we can consider market open will be very volatile, like very, very volatile. This week shows that we rejected this area. I marked these 2 weeks as it's clear that price is going to be there. So we just changed to the 2 hours. We don't need to flex 15 minutes or anything. We can see how price is trending here in the simple line that I marked in this week. That's an inefficiency. Like price needs to go there. Like if price is going down, it will test this area and will happen the same in this area. This red area is different. I have it marked because of other stuff in my analysis. It's not aligned with the weeks that I'm marking here, but also if I have it in my chart is because it's a very powerful level. So naturally price, if it keeps going down, you will see price going to this area. But the reality is this is the huge magnet. So if we go to this red line, the magnet will be for sure here. We will have huge liquidity targeting these 3 triple tops that formed before breaking new all-time highs in 2025. So the panorama for gold in the next weeks is very interesting. Per data, usually the last days of February and the start of March provide at least one move that it's 20-30% of your account if you are investing like something sweet and chill. Of course, if you are trying to flip, I did 100% last week, where I withdraw 125% like 2 weeks ago, but now it's up like pretty much triple. That account is, including the initial balance, is triple. I did it in all this range since the February 9th pretty much. So it was less than 1 month because also February it's less days, so a pretty good flip. And for the investing model, well, we're taking things slow. This account is already recovering. One that is for a client that I'm working with. As you can see, it took a loss last year. So I started the EA this year and is slowly going back to 2%. So the disgusting part of MQL5, for example, check this account. That is the one that is running B3 for the longest period. It's not showing the deposits as return. So this account is almost 12% in October. I think it started. Yeah, in October. And it's not including these deposits that are actually rebates. This is my broker paying me rebates for opening trades, like free money. And MQL, well, they decide not to add that as a win. They don't count it either as deposit loss, so it's fucking stupid. They don't add it here. They're pretty much showing incorrect information to my clients and to my investors. So that's painful to for me. And as you can see in the open trades, where we have a very chilled, smooth progression. I was closing actually by scalping some 0.02. This order has been scalping the range the past Friday a lot. As you can see, all these 0.02 were on Friday is the scalping logic that got triggered at that level. So for now, my TP is around this blue dot area, 3880. So I'm just waiting for that area, or if price wants to go down, I'm in. Like if we get to this area, I'll be closing at least 20-30%. And it's only buy. I'm only running the only buy model right now in these portfolios. I'm finishing the good sauce, you know. I'm backtesting for the final investing model of this year. And for now, well, I guess that will be covering it all, because to the downside we have all the levels. I recommend you to mark them. This is the 2 hour. But for the upside, we just have to recover first this level, then we go to this box at the blue area, and then we need to try to at least get to this level with, I wouldn't say with huge volume because it's to the upside. So if we just do it consistently throughout the week, past news and past events, we keep pushing to the upside, most likely we're gonna start having a range like this that we're gonna start just like here, like testing until we go to the upside or to the downside again. That will depend on the factors of that moment, so we cannot really predict at this point, but react. So I mark my zones, have my algo already trading, so he will take care of the investing portfolios for trading. As you can see, I don't have the, let me check. Let's open the Discord. I'm not using it a lot nowadays. You can see here my results. We do some good things. So here's the account that I was mentioning. So trading, you need to manage the accounts. For now, I'm not managing too much. I trust this trading specific set files. As you can see, I'm using some triggers or some progressions, kind of aggressive. I'm not very comfortable with this type of martingales because I don't usually trigger martingales. But this set file, it was a very big drop. Let's not hide the fact that it was a huge drop, so it's amazing that the account was not even flinching. And at the end, I don't even care if I am opening 100 lots. If I'm doubling my account or tripling it, I'm all in. That's the point. If I want something stable, something sweet, chill, long term, well, I go with the investing model, right? But for now, I'm going with the full power of the trading mode. So that's the benefit of having an edge, especially an algorithmic based edge. So that's it just for today, and we'll stay tuned.